Our first guest this week is Mr. Karl Schilling. He's the founder of the Advocacy Network. Karl, always great to have you on the program.
It's always great to be with you too, Don. Appreciate it. Thank you.
Now, Karl, the last time we had you on the show, we had a very interesting discussion about opportunities for CEOs of small companies to monetize their stock holdings without selling the stock. Can you go over that with us again?
Yeah, they are in an illiquid position most of the time. Because for them to go to market and sell any of their stock, it usually sends a bad message, to the marketplace, right? And they can at least have that going on. So what we've done is devise ways for them to liquidate a little bit of their illiquid revenue, right? And then get it into their own bank. And to give you an idea on an illustration, this is the proper use of life insurance, by the way, Don.
Okay.
And so few agents realize how to do it, and financial advisors don't want to do it, because they want to hold the stock, obviously, right? But to give you an example, I just did a proposal for a 47-year-old gentleman, and he would be putting in about $2,500 a month into a life insurance plan. And at his retirement at 67 years old, until he's 90, he'd be pulling out $175,000 a year tax-free.
Wow. And this would not be possible any other way.
No other investment will allow you to pull out income tax-free. Okay. And life insurance is not an investment. So I always like to make that very clear for everybody. It's when it's spoken of as an investment, people are misspeaking. They're being misdirected. Life insurance is a distinct, unique asset that allows you to create tax-free liquidity at any point in time, and also have liquidity for other issues, like long-term care, or college funding, or buying a home, or making an investment. Whatever you want to do with the liquidity that you have built into your life insurance, that's what it's about.
So when you're speaking to CEOs of small companies about this opportunity, not only CEOs, but executives that have holdings in their own companies, as you said, it's looked poorly upon by shareholders when the insiders are selling stock. So what kind of objections are you running into? What kind of fears do they have?
Well, I don't think, I think that most of the time they want to find a way to get some money out of their company. You know what I mean? So that's not I think that's at the front of the mind a lot for a lot of the insiders, because not every one of the insiders is this incredibly wealthy human being, who's just fully liquid and can do whatever they want. So it's really not a dangerous, it's a non-recourse loan, which they can usually find, we'll help them find them, but they can find them pretty much with their own financial advisors and people of that nature, but their financial advisors don't want to do it for them.
Well, all the benefits of whole life policies remain intact as well.
Oh yeah, absolutely, absolutely. We've used some IULs. IUL is an indexed universal life kind of policy now. We've used whole life, dividend paying whole life with really good carriers. And it's going to be interesting because we're coming into an interesting economic time where life insurance, once again, back when I started in the 80s, Don, early 80s, life insurance was in a boom period. You still had the 50% tax bracket, and you had a lot of people who were using life insurance properly, this way. Over the decades, life insurance became less and less recognizable, in theory. Wealthy people always recognize it, wealthy always. But for the middle class, people just stop paying attention to it, but we're coming back to a boom age because interest rates are going to go up. Interest rates go up, the dividend scales go higher for the companies. They have a better dividend scale. So the whole life policies really start to perform. The IULs will continue to perform, because they're based on options in the indexes, for the markets, right? So as interest rates go up, the indexes may not do as well as they normally do because, the market will probably correct. However, they are still fairly stable. If you're going to invest in the market, let's be honest, the best way to invest in the market, the smartest way is on the indexes. You just follow the indexes. Indexes go up, you win, great. Indexes go down, you lose a little. You win big when the indexes continue. This way you're not picking stocks. Now, we talk to people, your audience are people who like to invest in smaller companies, and they like the small caps, and they like that, and it's fine. That's fine too. To have your investments that way directed, but it should be long term. Right?
You're absolutely right when you said about insurance companies and insurance industry as a whole, because you don't hear much about whole life anymore. You hear mostly about term life. And I think a lot of people don't really know the difference.
No, well, we have the highest level of financial illiteracy in the world. Now, that's a frightening statement for a nation that's the wealthiest in the world. You would think we wouldn't have such a level of financial illiteracy, but we do. And so, especially impacting the middle class. The middle class by far is this huge burgeoning, thing that keeps our nation rolling, right? I mean, it's the backbone of the nation. And yet 95% of that middle class is totally financially illiterate. And this is why, they get scams and frauds and, and they're taken advantage of.
I read a research report not too long ago where it said that most people in the middle class, if they needed to write a $500 check for an emergency, couldn't do it. Again, and I'll close on this because I know we're running out of time, but, I wrote this book called The Middle Class Millionaire Plan. And basically we're able to show people in the middle class how to create what I just talked to you about creating for that CEO, for that person, insider in the company, who many are middle class, by the way. They may be mass affluent in some cases, but, most of them are middle class, right? Most of the CEOs you deal with, we would call them solid middle class, high level, mass affluent, making 250, 300 a year, give or take, right? Right.
So we have this plan, and it's 100%. I've done thousands of clients in the last couple of years, and we promised them to reach financial independence, and we got 100% track record done. So 100% track record. The biggest issue for a person, it's not about what everyone tells them. It's not about saving more money. It's not about paying down debts. It's not all. That has nothing to do with it. It's about increasing your income and getting your income increased into a plan that's going to create financial independence for you. And that's what we do.
Once again, the Advocacy Network. Karl, you always do great things with the people you talk to. Your insight is always much appreciated in the program. Thanks for joining us.
Thank you so much for the time, Don.